Hello guys, FX Bright here, the trade guru. So look, I want to share with you guys one of my deepest secrets, and that is the smart money trading. You see, for those of you in my trading community, when I call a trade, we move straight to take profit. You're wondering how that happens. There is a secret I want to share with you guys. By the end of this video, you will be able to take beautiful trades with ease. And look, this is not the normal way you think about it. I'm going to break it down for you with so much ease. Even if you're a beginner, you can go to your chart now and make profit. Watch this video to the end and it will change your trading forever. I will see you guys after the intro and the disclaimer roll. Alright guys, what we're going to be discussing on this video is simple. The first is structures, the second is the break of structures, liquidity sweep is third, the fourth is support and resistance zones, while the five is find the entry and take the trade, my brother. Listen guys, this video I know for a fact will change your trading. It will give you a lot of ease and profit in the market. Alright guys, now listen. To trade like the smart money, the first thing you need to understand is the structures. One of the structures you will find in the market are trend channels. When the market is moving in a channel, so you can tell that this top part is the resistance, while the bottom part is the support. So this is a structure, right? This is a market structure formation. In other words, you can see a repetitive formation of these kind of stuffs along the price chart. Now the other kinds of formation you would have in the market are triangular patterns, right, where the market forms something that looks like a triangle, and you can see some other kind of pattern you will see maybe like a wedge formation, right? So you can go study some of these kinds of patterns that happen in the market. Now the first thing you need to understand are these structures. Now, even if you don't understand structures very well, when you see the market forming a pattern that looks familiar, all you need to do is the second thing. Now, like I told you, the first thing you need to understand is structures. The second thing you now need to understand is when the market has broken these structures. Now, conventionally, you would, let me take a channel for instance, when the market is moving in this kind of channel, for instance. What you would understand is that at some point, let's assume this is a downtrend, at some point the market will come down and break this channel, right? When it breaks this channel, what you will expect from the market is a retest on the channel and keep on and a continuous drop down move from the channel, because the market has broken downwards. Now, but in this smart money concept, it's a little bit different. We are not looking for the breakout and the retest of price structure. What we are looking for is, for instance, let me draw the channel again. What now we are looking for is for the market to break out and keep going up. Now take a look at this. Remember, the first one I told you is when the market breaks, it makes a retest and start coming down. But in this particular trading like the smart money, what we are looking for is for the market to break and keep going up. Now, oftentimes you would have seen this in your trading charts, how the market will make a move as though it's going to break out to a certain direction, and all of a sudden you're trying to sell or buy in that place, and the market skyrockets to the opposite direction. This is a smart money trade. I want to teach you guys how to do this. It will make you a seriously profitable trader. You will be trading in thousands and thousands of dollars, millions of dollars even, if you understand this concept. Now listen. So I can give you another one. Let's assume, for instance, let's take an M structure, for instance, and the market was going to form something like this. And all of a sudden, you see the market forming this and coming down, probably breaking the neckline. This part of this part is called the neckline. Market probably breaks it, right? And all of a sudden, maybe the leg is a little bit longer, and all of a sudden, the market gets somewhere here and starts buying up with great speed. Now, what you will find here is a break of structure and an immediate move of the market to the opposite side. I want to show you guys how this works. So what I've been able to discuss is, first of all, the structures, understanding what the market forms, the M's, the W's, the triangular patterns, and all these types of patterns that the market forms. Then the next thing we need to understand is that the market broke structure. Now, when the market breaks structure, the next thing you want to understand is the resistance or support zone close to the structure. Now, let's assume, for instance, the market formed a structure. So let's take this. Let's say the market was coming down. Then the market, in its way down, started forming a flag pattern, right? Like a rectangle, something like this. So it has a support zone, it has a resistance zone, right? So what you will see from the market is that the market might eventually break towards the downside. Then the moment the market breaks towards the downside, the people who wants to sell are already trying to sell, right? But all of a sudden, what the market does is that the market speeds up, changes trend all of a sudden. And you see this particular move here, it moves with so much great speed that it doesn't even give you time to take entries. For instance, if you're even somebody waiting for a retest just doesn't just happen. It goes straight to the take profit. Now, what I'm saying is that there are two things that happen in this particular place. The first thing that happened here is what you will call the liquidity sweep. The second thing that happened here, don't worry guys, we're going to get to the chart. I'm going to show you guys exactly what I'm talking about. So the first thing that happened here is the liquidity sweep. The second thing that happened here is structure. So what is liquidity sweep? Liquidity sweep is when price breaks structure to take people's profit, to take people's trades, right? So for instance, let me use the same analogy. You will see price doing something like this. Let's say it was still coming down, then we start having this range. Now, the moment price, let me just box it up. The moment price is able to break this point, you can tell that there will be people at this point trying to sell the market, right? So what the price will do is to reverse on them and hit all their stop losses. So the market will take all their money. Remember, they are selling from this point. So because they are selling at low price, the big boys in the market will come and buy their market at low price, and it will start going up. So if you're only trading with an understanding of when the market breaks out, you're going to take your buy or sell, you might fall into the trap of these kinds of trading. Now, there is a way to trade it with apt accuracy. Now listen guys, if you're in my community, you will know I never make a losing trade. I almost never tell you a losing trade. There is always profit. Now I'm trying to share with you guys some of the deepest secret on why I am a very, very, very profitable trader. Now listen, so the market moves up with so much great speed. So now let me show you the same example in some other type of way. Now imagine again, the market is coming down, for instance, and it starts ranging, right? So it's ranging now. So let me put on the resistance zone and the support zone. Now what the market can do again is to maybe buy upwards as though it has broken to the top side. Once it breaks to the top side, some of the traders, newbie traders, are all here trying to buy the market now because it has broken to the top side. Now what the market then does is to drop down all the way and continue the same movement. So what you would see here is that the market has been able to sweep up liquidity. In other words, everybody that was trying to buy there, the sellers came and sold the market with great speed. So they bought from the sellers at a very high price, and the market drops down. So while they were trying to buy, the market comes down. So this is called the liquidity sweep. So the market used their positions as liquidity to move in the direction it wants to move to. So the next thing we need to understand, now I've been able to explain to you what liquidity sweep is. Now the next thing you need to understand is also the support and resistance zone. I'm trying to let you know that in such kind of scenarios, when the market is making this move, for instance, coming down, then market starts ranging, and maybe we're going to draw the support and resistance zone, and the market for some reasons breaks up as though it's going to go upward. If you look to the left of this particular place, what you're going to find is a support zone. It's a certain zone that was able to act maybe as a support, as a resistance. So what the market does, it breaks up to that zone and takes itself from that zone all the way down. Now I'm going to show you guys how this works in the chart. If you don't understand what I'm saying, don't worry yourself. We're going to get to the chart just in a bit and we'll see how this works. All right guys, so let's take a look at this example. Now check this out. Now you can see what the market was able to was doing somewhere around this point. Now this is an uptrend. I'm going to zoom out so you can see the general move of the market. You can see that the market was in an uptrend. So I want to zoom into this point and show you something really important. Now if you take a look at the market being here, you can see what the market was able to do. It went up, come down, and it was sort of in some type of trend formation. Now this, if I put the trend line here, now I just want you to understand what I mean by structure. By structure, I mean the market will be forming a certain type of pattern. In other words, it can be, remember, this is an uptrend, right? So the market was bouncing, making higher highs, and all of a sudden, you might want to think that the market is bouncing, and it's probably going up. So in your, in maybe the way you were thinking about it, if you look at these points, you would also see how the market was able to, it was hitting this point. This point was a good resistance zone, and all of a sudden it was able to break it. Now when it break it, it didn't go up, it dropped all the way down, breaking this resistance, this support zone, and coming all the way down. Now listen, the reason why this is also what you would call a liquidity sweep, because the moment the market was able to break this point, some people will already be in a buy, and they will call this the breakout. So the breakouts, so they are probably trying to buy now. But what the market was doing is that it was able to break out, and the moment all these people, newbie traders, placed their buys, it went all the way down. Even I'm sure they would have put their stop loss somewhere around this point, or maybe somewhere here. So the moment the market was able, they were able to place their buy trades here, the market started dropping down to hit all their stop losses. Right now, when the market was coming down, it also came here straight forward to break structures, and as though it was going to now continue in a downtrend. Now when the market got to this point, the people who didn't buy here, that thought they were smart, will come here and say, wow, the market has broken structures to the down point, then it's probably about to change and start selling, maybe make a retest and start selling down. And to their greatest surprise, they started selling here. The moment they started selling here, the market started buying all the way up. If you look to the left, what you would see is that the market actually has not broken. That's why I tell people how to wait for breakouts. Now listen, these points, when you look to this left position, look here, you would see how the market was forming a support zone around this point. And when you stretch it all the way to this point, you will see that even though the market has been able to break this structure that you would think, there is a major structure just below it. Now what I do is, now I've been able to make you understand that the market breaks structure. And because it broke structure, the people that don't know would think the market is about to sell. They start placing their sell, right? So this becomes a sweep pattern. This becomes a liquidity sweep. In other words, to take the trade in a different direction than most people are expecting. So, but I'm trying to make you understand how to spot this type of patterns. Now, when the market is breaking structure, ensure that the market breaks the horizontal structure. So when the market breaks a certain type of structure downwards, what you need is to look to the left to see whether there is another major structure. If you find a major structure just close to, if you find a major support and resistance zone just close to a structural formation breakout, be rest assured that the market is most likely about to make a liquidity sweep pattern. What you will do is you will just go straight to the structural support zone and wait for an entry. Now you can wait for an entry like a bullish candle. The moment you see a bullish candle, you can now start taking your buy, because you know that that point has become a very high liquidity point zone. So because of the opposite trade you will be taking. Now take a look at this particular top side. What you will find is that the market was able to break this structure to the top. But if you look to the left, there is an immediate support zone that the market needed to break. Now I'm trying to tell you that some people would have gone there to start taking another sell position, another buy position, without first allowing the market to do what the market needed to do. Now, if you look at this particular point, I'm trying to tell you that because the market broke up, it doesn't mean that because it broke this structure, it has started going up. What you will look is to the left of your market to see whether there is an immediate support and resistance zone. If you can find an immediate support and resistance zone, you must also wait for the market to break this one, make a retest on this one, and find its buy. Because when the market gets to this point and drops down with a sell with a sell candle, you can come there and find your trade around this point, and it will be a liquidity sweep zone where you can take. So just imagine you understood this, and when the market made the move, you found an entry around this point and took a sell position. People are wondering why you're taking a sell when the market just broke out. You took a sell and the market straightforward went all the way down to this point. You got your money. Now, for these other guys who were here, who were thinking because the market broke to the downward side, the market is about to move. A guy that has watched my video right now will check to the left and find a support zone. Quickly draw the support zone, and when the market drops down, he finds a good entry around this point and buys all the way to the top. What am I saying? Understand this concept. I'm going to show you one more examples, and I hope this will sink home to you. All right, guys, let's take a look at this example. I'm sure you can't see it right now, but I want to show you something very important. Now, look at this. Now, you can see the price obviously is in an uptrend, right? The market is going up. Now, I want you to picture your mind in real time, right? I want you to imagine yourself in real time to see your thinking process. Now, imagine the market was going up like this. So let's say this is where the market is. So, and the price is moving. Now, take a look at what is happening. Now, it's easy for you to, spot a price point and, stretch it out like this. And you can see how the market was, made some bounce off this particular point. And there is a tendency for the market to, keep bouncing on this price, this trend line. Now, let's see what happens as this market began to proceed. Now, you can see what the market was able to do. The market at this point has been able to break this trend line and, made a bullish move, made a bearish move to the downward side. Now, on hindsight, you can see that the market has broken this trend line. Now, some people will begin to sell. Remember, there's a tendency for the market to drop down all the way to this point, maybe before pushing up another buy. But you can see what I'm talking about. The market was able to break down to this point, made a bearish move to the downward side. Now, the moment the market made a bearish move to this downward side, you might be thinking that the market is about to sell. When you look to the left and you find an immediate support zone that you can be able to draw, right? So look at this. Now, this one is a very quick one. Now, the moment you see the market already making the buy pressured move, already you are supposed to be on this particular sell. What I'm saying is, when the market is able to break a certain structure, quickly look to the left to see whether there is an immediate support or horizontal zone. If there is an immediate horizontal or support zone, when the market gets there and begins to make some buy pressure or some buy or sell pressure, depending on where you're going to, you will now find an entry around this point and take your buy or sell. At this point, I guarantee you that the market is about to make a speedy move to the direction you're telling it to do. Why? Because at this point, some people would have taken a sell, so their position will serve as liquidity for your buy. So once you place this buy entry on top of this point, on this particular point, the market begins to move with speed. Therefore, this is how to understand the market. Before you should take a trade to the sell direction, always ensure that the market breaks through two support or resistance zones. For instance, the market ought to break this one, which is this trend line, and also break this horizontal one. Make a retest before you will now understand that the market is about to sell. If the market breaks one, gets to the other one and starts buying, there is a liquidity sweep potential. This is called the smart money trading. It is at this point you come there and feed in this position with a lot. Look, if you're even trading small account, let's say you have a $10, $20, all those small, you don't need to trade everything. Find liquidity sweep pattern, find smart money areas, and I'm teaching you how to do that. Find structure. Find the market to break structure. Look to your left to find immediate support or resistance zone. Load the position once you see the pressure of the market is going to the direction you want it to go, and go and sleep. What you will find is that the market just quickly moves to the direction you want it to go to. This is how to trade. Guys, I'm telling you, you won't see this on YouTube, right? So I want you to understand this, get the concept. Now, if you want mentorship, if you want me to teach you my exact way I take these trades with apt accuracy and make profit every day, you can always DM me and I will be showing you how to do this stuff real good. Now, I hope this particular strategy was able to help your trading, right? So I will see you guys in my next video.